This is the Friday, November 16th, 2018 version of the Market Plus segment. Joining us now is Dan Hueber. Dan, welcome back.
Thanks very much.
Dan, we've got to touch on feeders. I know you mentioned it's probably the market you watch the least, but we've definitely got listeners and watchers that
certainly.
pay attention to the feeder markets. This week was an interesting week. We started the week strong. We had 3 or 4 days of sessions that we closed higher. Then Friday we closed lower. Where do we head from here?
Boy, I mean, and again, the feeder market, of course, is I think going to be heavily influenced not only by where the fats are moving at this point in time, which looks positive, but you know, what are we looking at in the on this feed grain situation? And you would think the lower grains, the lower trading the grains we witnessed would be a little bit more supportive, but it's you know, here again, I would tend to think that as long as the fat market looks good out into next year, that the feeder is going to be supported well. So it. You know, right now it's a lot more profitable for many to look at potentially walking their corn to market than it is to try to take it in a truck. So
we're sitting at 146 approximately right now in the January contract. Is that where you're finding resistance levels at?
Oh, yeah, absolutely. I mean, we after the bounce back, I mean, we pushed up into some pretty good resistance. So I mean, if nothing else, a little technical retracement into the end of the year would be pretty normal. And again, not a time of the year that people are really bantering to get cattle on feed. Of course, it is as the weather starts turning worse again too, you tend to have people backing away from the demand.
Absolutely. Let's take some social media questions. We had quite a few come in this week in regards to the China soybean trade deal, etc. Starting off here with Kendall in Iowa. How can anyone be bullish near $9 soybeans with a billion-plus bushel carryout?
A very valid question. You know, of course, one we you know, add into that we have it looks like a tremendous start to the planting season in Brazil. In fact, as early as they got in, there could be some soybeans coming to market as early as, well, harvested in late December, coming into market in January. You know, I think the most optimistic thing you can say is, one, we have certainly thrown a tremendous amount of negative news at the soybean market. You know, that not only that factor, but of course, you know, a large crop here. We know the demand has been down, so we've really compensated. All of that's really been needed into the price at this point in time. So any kind of improvement would tend to start making a little price improvement as well.
Which
now,
we've seen reflected.
Well, you know, to a certain extent, but I mean, even then, the prices have really just been in a big kind of trading range. They've come off the lows, but you know, we're kind of stuck in the range here right now. Keep in perspective, though, as great as things have been in Brazil, long ways until we get the total crop harvested. Argentina is having a little bit of problem, a little bit too much excessive rain down in those areas. So, you know, and that said, you know, when we talk about 1 billion bushels. Yeah, I mean, we're almost projecting how bad things are. We factored in that massive 130 million bushel cut by the USDA on soybean exports. So we've already thrown a lot of negative news out there. So it doesn't take much then to maybe get the psychology just a little more optimistic than it stands today. The question, I think, probably, though, is looking out at that new crop soybean. You know, new crop soybeans at the $9 plus range, you know, you really can't fault somebody who knows they're going to have beans in the ground if they can make money at that point to go ahead and start selling those. So,
Dan, if we do get a trade deal in place, let's say 2019, I know we're talking a lot of hypotheticals, but will that reduce the carryover by very much, or the stocks?
You know, it's probably not going to do much for the 2018 2018-19 carryover, but you know, markets are always forward-looking, and if they think we're going to see into the next year, particularly if we come back with an acreage reduction for the planted crop this year, you know, any kind of a weather issue, then sure they're going to be looking out into that 2019 crop and saying, well, geez, you know, we could start turning that situation from an abundance to a tighter supply pretty readily. So.
We've got the G20 meeting coming up here. We've got to talk a little bit about that. We've got a question from Louise and Amy, Kansas, on U.S.-China trade negotiations. Do you expect anything to come out of that G20 meeting as Trump promised, or was that effort to get re-election votes from farmers?
You know, I mean, not that couldn't have been part of the motivation, don't take me wrong. That the fact that China waited until after the election and then came back with a written statement saying they really do want to talk, they really want to negotiate, I think there's a little more to it than just posturing for an election. That said, that certainly doesn't assure that something will come out of the meeting or something positive will come out of the meeting. But boy, I mean, any step in the right direction is a good step at this point, because realistically they haven't other than throw insults at each other or increase additional tariffs, they haven't done anything for 4 to 5 months. And we're scheduled now, and come January, if something isn't settled, we've got another 25% tariff goes on Chinese products. So if we can avert that, it would be certainly a positive thing.
It absolutely would. How positive will it be? Question here from Stephen Findlay, Ohio. If President Trump gets a deal with China, how much will soybeans go up? I know it's hard to quantify that one.
I mean, again, challenging. I don't think a 10% rally would be unreasonable, just because, I mean, people are going to feel better about the market, better that there's going to be some increase in trade, and most certainly there will be. I mean, Brazil cannot supply all of the beans to China unless China really does start using other substitutes. And for the most part, I think it would be a lot simpler for them to come back and start buying U.S. soybeans. So yeah, I mean, 10% rally. I don't think would be unreasonable. To get above and beyond there, we're going to have to see something a little more concrete as far as new demand picking up again. So.
To counter that, we've got a question from Paul in Minnesota. He said, are $3 soybeans possible if trade talks fail?
I would, and again, $3 soybeans are maybe in the extreme. Could it be low $8 soybeans? That's certainly not a stretch. That said, it's interesting that I should say $8 to $7.50 soybeans. Interestingly enough, when you look at all the bad news, I mean, really a virtual absence of the Chinese from the U.S. market, and we push down to this 8 to 8.50 range and have stabilized, it would tend to say that the market's telling us soybeans, just on a worldwide basis, have value at this point. Now, granted, being down here is also discouraging production in this country, which is part of that element. Unfortunately, it's certainly not discouraging production in Brazil, because if anything, they're looking at pushing up acreage. And part of that is the function of how their beans are priced. And the stronger the dollar is against the Brazilian real, the more incentive they have to increase their production on beans. The new president in Brazil is also quite pro-business, and it looks like if somebody wants to push it further into the Amazon and strip out jungle and start putting in soybeans, he'll probably be a proponent of that as well. So the competition's not going to get any less from that South American nation. So.
The oil markets, I think, are something else we need to make sure we talk about here. Are the oil markets having any effect in the commodity markets yet at this point?
I can't not believe that the pressure we saw this week in crude didn't negatively impact the corn market. That said, I think the corn market is really not viewed as much as an energy market as it used to be. All that said, really crude oil has been on a 2-year rally. And, in fact, the most recent advance in crude oil has been, I counted that, I think, 67 months. We have been higher. A correction is only natural, really, at this point. And, of course, it wasn't too many weeks ago that when we were going to start really harping up on new sanctions against Iran and how that was really going to send the crude oil market back higher. Saudi Arabia kind of stepped in, and, of course, I think they're trying to buy a little favor back from everybody, because they're certainly not one of the more popular countries in the world here right now. So, what we saw in the crude sound panicky, and boy, after such a long move up, that sounded the end is here, and we're gonna take the commodity markets back lower again. I think it was just kind of a natural ebb and flow of how markets work.
So it's a correction. Dan, is it a short-term correction or a long-term?
I think we probably have the majority of it done. I mean, we retraced 50% of what we just rallied over the last 67 months. 67 weeks. I don't know, months, 67 weeks. So I think that was just natural. I think that was, granted, demand has suffered a little bit, which is not unusual as you come into the winter months, but world economy continues to grow, world business continues to grow. Maybe it's slackened, it's slowed up a little bit, but as long as that continues to be the case, demand or usage for all petroleum products is going to continue to increase as well. So.
Dan, that sets us up perfectly here for our last social media question. Dan in Lawton, Iowa, he said, with crude oil as low as it is now a good time to lock in diesel needs for the spring?
I think it would be a good move. Yes. I mean, and again, none of us can actually perfectly pick a bottom unless we're just very fortunate. But when you see a move like this, and again, as I said, it's not that we might have a temporary blip in usage over the near term here, but long term, we're going to continue to increase that demand. So yes, I think it would be a good move.
All right, Dan, we almost forgot about cotton. We've got to weave that in here.
Okay.
Where are we seeing resistance and support levels right now for cotton?
You know, the cotton market has been interesting in the respect that it's just stagnant. And again, you know, I guess you could say that about almost every commodity market. You know, either in a larger or smaller extent, seem to get stuck in these trading ranges. Cotton has broken down well from the highs here over the last month. The December futures have seemed to be finding support in this low 76-cent range. Almost act like they want to teeter and go over the edge and maybe take a push down towards 72, 73 cents. But right now, I think it's 50-50 odds. I mean, I think we could hold in this level as well. I'm a little surprised they did not have a little more support by some of the weather issues that were in Texas here most recently. But, you know, we'd tend to say that I think people have just shied away from commodities here for typical end of the year. You know, you get towards the holidays, end of the year, sometimes it's difficult to bring new investment money back into the market.
So hopefully might see some strength for all commodities beginning of 2019.
You know, I guess I am a big proponent that I think we're probably seeing the peak in the equity markets. And I think if that happens, then we're going to see money start diverting back into commodities and treat that as a true value out there. And I think the ag sector is the one that's probably the oversold the most.
All right. Dan Hueber, thank you so much.
My pleasure. Thank you.
Join us again next week when we'll explore how hunters are filling empty plates in the heartland, and Darren Newsom will join me at the Market to Market table. Until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.